you're having a hard time selling your existing home and you're just saying, this isn't working out right now, but I need to purchase that next home. Maybe you find yourself in winter, fall, it's just not working out season wise, or there's just, not a lot of buyers on the market right now, but you need to move quickly. One tool that a lot of our clients utilize is a bridge note loan. Now, a bridge loan is something that can be a great tool, but it is something we do want to be knowledgeable about. We want to make sure we really fully understand what are both the benefits, what are the potential risk or downside to choosing this option. So first off, what is a bridge loan? Well, it is exactly what it sounds like. It is a loan that will cover you while you're looking for the next home. That allows you to tap into some of your existing equity so you can't be underwater. It is something where you do need some equity involved with it in terms of what you owe for your existing home. Now, something else that you want to consider is, again, the bridge loan is designed for 6 to 18 months. It is designed because, it is a higher interest rate. It does sometimes have points and higher costs associated with it. But if that's more or less a last term option, you don't want to just sit on your existing home or not purchase, especially if it's something where you need to move due to a job, or you don't want to actually hold on to those two loans. Again, this allows you to kind of tap into your existing equity and be able to purchase that next home. Now, again, to be clear, this is a short term option. This is not something where you're saying, okay, I'm going to hold both notes or I'm going to hold both mortgages and I'm going to, hold on to this for, 10 years and then sell my existing home. And the reason I say that is because, again, keep in mind, most bridge loans are basically 6 to 18 months. And at that time, the entire note becomes due. So what do I mean by the entire note becomes due? It means at that point in time, you either need to refi or pay it off. Now, there are some different options where, if you get stuck in that and maybe it's, turn it into an investment property or you turn it into something else. But the point is that lending institution that you utilize, you want to be very clear with them. What are the terms and when do I need to make sure that I have this home absolutely sold off? Again, it's a great tool if you only need 6 months, 12 months, 18 months, but you want to be really clear with the lender. What are the exact terms of that? Because if it becomes due, you don't want to be in a situation where it's a really high interest rate market. You don't want to hold on to it, all of those types of things. So, you want to make sure your realtor and your lender are aware of your goals when you're purchasing. Another downside to it, or really just a risk associated with it, is, it is something where you do have to qualify for it. If you're looking at purchasing that next home and you're at a 50% debt to income, which basically means that, 50% of your income is going towards your debt, odds are you're not going to be able to qualify for a bridge loan. So again, you do have to have equity in your existing property. It can't be underwater. And when you're looking to purchase the next home, you do have to make sure that you can qualify for both loans. Now, a lender will go over the specifics with you of what those terms look like with that bridge loan and what monthly payments and whether our costs are associated with that. If there is any prepayment penalties with those, there's typically not. But again, that's all good questions to ask. In a low inventory market, bridge loans aren't necessarily needed. But when there's, a large increase in interest rate, there's not a ton of buyers out there. It can be a great tool to help get you into that next property. If you guys have any further questions, please drop it in the comments section. Follow us for more topics. And if you want to see additional topics, feel free to drop that in the comments as well. Thanks, guys.